Hello, hello, hello. Welcome now, Stock Trades. I'm gonna put the mic here. I'm sorry, I haven't checked it since the last time. I've been so busy. So please, comment down below after watching this video if you can hear it correctly. So, right now, guys, look, it seems to me that Fang is dead. Now, for people that don't know what Fang even means, it means stocks like Facebook, Amazon, Apple, Netflix, and Google. We already saw the demise of Netflix, even though it's slowly recovering. Facebook, yes, yesterday was just crazy. Google, we're starting to see some, headwinds. It's starting to get to a point where these safe stocks are no longer, they're big, but they're no longer the stocks that are once where they used to be. And please let me know if you can hear me. Okay, if you can hear me, good. I haven't modulated. Um, I haven't modulated my mic, so hope that is good. Okay, so with that, it's gotten to a point. Good morning, Mr. Gunner. It's gotten to a point, ladies and gentlemen, where it is I fear that the era of index funds is slowly coming to a end. What do I mean by that? I mean that the returns are going to be quite nominal because if you look at the biggest companies, if their revenue growth rate now is of a company that is 5 to 10%, then we're getting into an era where what part of the growth phase curve are we at? It seems to me that Tesla, is increasing both its revenue and its net income, its top and bottom line, as we like to call it in finance, quite more frequently than these companies. And you can tell now we're going to be in a time where in quite some time. And the companies that come out with a success. Okay, perfect, perfect. I'm happy. I want to make sure some one of the kids played with the the modulation there. Okay, so we're getting to a point now where we need to look at stocks like it's the time now. Now it's going to be the time where you're going to look at companies and you're going to say, okay, what are they doing in this inflationary environment? Are they still growing when interest rates are high? Because the companies that are going to do well now are the companies that are going to do really, really well during a bull market, during Federal Reserve decreasing interest rates, during an era where quantitative tightening is not happening. The Federal Reserve, as we speak, is slowly increasing its tightening and sucking money out of the economy. So that is what I wanted to say in this regards. The next thing I would like to talk about is within our private group here, I posted the smart money, dumb money confidence spread. And what we see now is we're starting to see dumb money start coming back alive. Dumb money has started to get into the market again. Dumb money has started to get excited, and smart money has started to go down. Now, for anyone who's just heard this for the first time, I always like to explain it just in case if there's one or two people. Whenever you open up a brokerage account, you give them how much money you make, your information, and also the broker knows what you buy and sell. So that is useful information, and that information can be sold to a hedge fund. And this data comes from a former hedge fund. The blue is smart money, as you can see in the upper left here, and the red is dumb money, as you can see in the key legion below. And this is the XPX, also known as the S&P 500. So this is usually over 100 million, and this is below 100 million, right? It's about retail, right? And what we're starting to see is that retail is starting to come back online. Now, for all of our mastering stock market students, under useful charts at alstocktrades.com, I pre-graphed some support and resistance lines and did some technical analysis here for you, but this is not updated. You can see there's a little blue link here. If you if you click on this link, it'll take you to a chart that is updated. So let's go ahead and let's zoom in on this chart here and let's investigate. So again, black means it's going up and red is going down. It's a great way to look at the stock. And this is a very outstretched, I would say, a great way to combine technicals and fundamentals together. What you're starting to see here in the most recent price chart change, we're starting to see an upcoming reversal in the MACD potentially, just like what we did here. But most importantly, we saw, as you can see in the red, a bounce off of the 200-day moving average, going into about slowly going into to touch the 52-day moving average at around $4,200. Now, the question is, are we going to touch there? That's the question. Well, this is where you draw a line here and a line here, and then shift the charts into a smaller time frame. And then you can look at where we are there. And a lot of technical analysis, successful day traders and swing are doing this. But what I'm trying to say here is that this may be another bear market rally. Okay. So what if, for folks that don't know what a bear market rally is, well, a bear market rally, and came from a very famous book, a bear market rally, and this is the 30-week of May, and this, in regards to what we're looking at, is a 52-day, because we're already above the 200-day. What we're looking here is these bear market rallies just go up, but they almost touch the 52-day, or in this case, the 200-day, because 30 weeks is around 200, and then it continues to basically fold down, okay? We need to see a capitulation, surrendering of the retail investors, which we already started to see. Not to the level that I'm used to. And we need to see a breakout and a sustained rejection of the line of question. And in this regards, the line of question is the blue line. If we can hop over this, then we can start getting positive momentum, okay? Or just build out a slow positive momentum. But more than likely, this may be another bear market rally. However, if you look at the RSI from the June drop, it was much lower than the RSI from this drop, which I felt like was more significantly lower from other stocks. So this is kind of the analysis that I was thinking to provide for you in this very, very short video here, okay? So let me go ahead and just go. Seems almost given. Yeah, we Apple. I don't know. I have to look. Apple's always been the stock that has always provided us security, and we're going to see. I personally designate a hold, and I designated this hold from a while back. I initiated the price target was deemly overvalued, and the reason why is Apple. People treat it as like a bond, right? But people treat it as a bond because it's safe, but there's no such thing as safe, right? So we're going to go ahead and see. Most likely, I believe Warren Buffett will double down on his position for Apple because I don't see them going anywhere. Innovation is key, and they can do whatever they want. They've held Meta by the gonads, right, with their ability to stop their advertisement and make them lose $10 billion. They have a very strong grip. But overall, this is what I wanted to share with you guys. I believe Fang is dead. I believe the next era will be picking stocks, but picking them strategically. When I say picking them, I mean professionally picking them, looking at it from a very concrete set of lists that you go through with no emotion, mathematically derived and driven, like what we do. I believe this is going to be the next era of investing. I believe index funds are not going to give you the returns that you would be able to find in companies that have revenue growing and net income growing and free cash flow going with an intrinsic value below, right? And then we're going to do a margin of safety calculation the way I like to do it, by using book value. We're going to be doing that. It just haven't, slowly, I'm chucking along right now to get to providing you guys what I know. The issue is I've been building out our stock trades and our stock alerts, and I've slowly come close to an end with the brain machine. Obviously, there's way more we can do in terms of graphs that I would like to provide, but in the time being, we will slowly release updates. But overall, I'm starting to become closely satisfied with the material that we have. So now we're going to get to application. Okay. All right. So love each. We'll talk about that in the earnings. We'll talk. We'll do an intrinsic value, and I believe I'm gonna gun for hosting them. Okay. All right. I have to get to work. Luckily, I live next to the hospital, so it's not too far of a drive. Love each and every one of you. I'll see you on the next one.